But let's move on then. Srishant Challa, who's the managing director at CCL Products, joins in right now on the show here to discuss the outlook on the overall business, as well as we talk about what's brewing when it comes to Robusta coffee prices, which are at a 12-year high. And I think I'm going to begin with that, a 12-year high, and that's largely on concerns of the tight supply. What is the on-ground situation in terms of the supply from Vietnam and Brazilian Robusta exports?
So, based on the crop cycle, we've seen that the Brazil crop will come in the next 2 months from now. And as of now, in Vietnam, there are a lot of defaults which are taking place, which is actually causing this steep price increase. So there are a lot of funds that have taken a position in coffee, and there's an artificial demand that has been created. And because of this, with the defaults taking place, it's a spiral that has started right now, which is causing this artificial increase in prices. To be frank, we don't feel that this is sustainable. Once the new Brazil crop comes as well, there should be a steep correction that takes place.
Okay, fair enough. So don't believe that it's sustainable. But the other big factor is the El Nino situation. And there's a possibility of a cut in global coffee production. What are your thoughts on this? And if the prices increase further, would that change in the coffee contract prices?
So going forward, it depends on which region we are looking at. As of now, the Indonesian crop is also coming into the market. There is a reduction that is there in Vietnam and Indonesia, but it's to the extent of maybe around 15% or so. Brazil, we're actually expecting a very good crop. And this year, I think in the next 2 months, we will get clarity. Brazil being the largest producer in the world, that was going to determine how the coffee prices are going to pan out in the near future.
So as a company, Srishant, how is it that you are protecting yourself from the impact of high prices, and how much coffee inventory do you currently have?
So we work on a cost plus model. So we act as a converter. So anytime a customer comes to us with a certain contract, we cover the raw material on a back-to-back basis. So we don't take any risk with respect to the coffee prices moving up or down. We advise our customers accordingly. If a customer is well covered for the next couple of months, we would guide them saying that wait for another 2-3 months before you confirm more volumes. Typically, we have orders in place at least 1 year in advance. And because we work with large trading houses, we don't have any defaults that take place at our end. So our partners who are supplying the coffee to us, they end up supplying, even if they have to buy in the market at a higher price, they buy the coffee and ensure that they supply to us at the contracted price. We don't take that risk at our end at all. That's how we are protected.
And is that the case with your margins as well, or does it impact your margins in any way?
No, it doesn't. Because we do it on a cost plus basis, our margins also will not be impacted any way. The only thing is the top line is something that is going to get impacted, not for the contracts that are in place, but if we do any business now for the future, there will be a larger top line that we'll have to factor in.
And let's discuss your Q4 earnings as well. The FY23 volume growth was at 20%. The guidance was given for FY24 for volume target of 15 to 20%. Are you on track, or will there be a decline in volumes?
We're looking at around 20% this year as well. So last year also, we have given a similar volume guidance. I think we ended up with about 21.8% or something like that. The EBITDA growth also has been proportionate. This year also, we've given a similar guidance of 20% plus or minus maybe 2%. So we are on track for that. We already have our contracts in place for the current financial year. We've already started selling for the next financial year as well.
Okay, and what is the outlook then in terms of your operating cash flows? That has been a bit of a concern. When do you think that we can see the full potential for CapEx kicking in?
So we've already come online in Vietnam with respect to our expanded capacity. We are now at 30,000 tons in Vietnam. And there's another expansion that we're doing in Vietnam for freeze-dried, which will come online next year. So our free cash flows are restricted right now because we are optimally utilizing our cash flows at this point in time. And we don't have any spare cash that we are leaving idle at any point in time. We are on this expansion spree, so we are looking at the next at least couple of years where this free cash flow is going to be in a similar range as it is now.
Appreciate your time. Thank you for joining in and sharing with us a view on how things are shaping up, the outlook on your pricing trends as well. That's CCL saying that as of now, 20% volume growth for FY24 is expected. Margins will not be impacted on the back of coffee prices. And as of now, they are expecting a sharp correction in prices post the Brazil crop. That's CCL Products for you, down about 0.6%.